Good evening, everyone. Thank you for joining our webinars today. Hope every one of you are doing well. My name is Hong Sing from Phillip Futures Marketing, and I will be the MC for today. During the webinar, if you have any question, do type them into the question box, and I will address the question during the Q&A sessions at the end of this webinar. So before we introduce our speaker, please allow me to introduce our company. As usual, I need to emphasize on our disclaimer where this presentation is not being reviewed by Securities Commission Malaysia and is provided to you solely for general information and does not constitute any recommendations. We are not liable for any losses arising based on these informations. Investments are subject to investment rates. Therefore, you shall seek advice from quality advisor before you making any investment decisions. Phillip Futures is a wholly owned subsidiary of Phillip Capital Holdings Sdn Bhd. It is incorporated on 7 October 1995. Our headquarters is in KL and branches distribute across Malaysia such as Kota Damansara, Melaka, Penang, Johor, Kuching, and Kota Kinabalu. Other than that, Phillip Futures is a trading participant of Bursa Malaysia's Derivative Berhad, clearing participants of Bursa Malaysia Derivative Clearing Berhad, and also hold of Capital Market Service License, known as CMSL. I would like to take these opportunities to extend our gratitude on behalf of our companies. Phillip Futures, without you all, are unable to achieve the awards in 2022. So our global networks, they are wide arranged throughout the world. We are providing different products in our global different networks. As you can see, it's the United States, France, Turkey, India, involving China, Indonesia, Singapore, and Australia. For futures, we cover not only products in Malaysia, we all covered from different exchanges such as Singapore Exchange, CME, CBOT, NYMEX, and more. With our strength of global coverage, client able to trade both local and foreign products under the same platform. This is the products available for Phillip Futures. Phillip Futures are main focus on products offering our futures and also CFD. Why should you choose Phillips? First of all, we provide advisory service such as enquiries. Next, we provide wide array of products for futures that enable clients to trade both local and foreign products. Other than that, we send out our latest markets news and commentaries to clients every day through emails for reference. Lastly, our headquarters has 24 hours brokering and exclusions supports. This is important for clients who trade foreign futures, and also dealer can assist you enquiries anytime. Next, I would like to introduce Serene Chin. Is a marketing executive and dealer at Phillip Futures. She holds a bachelor degree in marketing from Multimedia University. She offers regular personal coaching sessions on futures trading and platform usage to new investors. She is also a holder of CMSRL issued by Securities Commission. Without further ado, let us welcome our presenter, Serene Chin.
Okay, so good afternoon, everyone. I'm Shireen here. So do you guys can hear me?
Yes.
Okay. Yes, you can hear me, yeah? Okay. So before we start, if you have any questions during end of the webinars, you can type them into the question box, and I will address the questions during the Q&A sections at the end of the webinars. So without further ado, let's start today's webinars, which is the FCPO introduction to FKLI and FCPO. Okay, so I will do a disclaimer here. So this presentation has not been reviewed by Securities Commission Malaysia and is provided to you solely for general information and does not constitute any recommendations. We are not liable for any losses arising based on this information. So investment are subject to investment rate, therefore you shall seek for quality advisory before making any investment decisions. So during these webinars, we will talk about the key fundamentals drive the FKLI and the FCPO. And then we also will introducing two new products, which is the FTSE Bursa Malaysia Mid-30 Index Futures and our East Malaysia Crude Palm Oil Futures. Next, we will go to the technical analysis and fundamental analysis. Then lastly is how to capture the market opportunity from the future tradings. Okay, so first, what is FKLI? Okay, actually FKLI is a Ringgit Malaysia dominated by FTSE Bursa Malaysia Kuala Lumpur Composite Index futures contract that traded on the Bursa Malaysia derivative. So the underlying index for the FKLI is the STSE Bursa Malaysia Kuala Lumpur Composite Index, which is a market capitalization weight index of top 30 blue chip stocks of Bursa Malaysia. Here you guys can see this is the contract spec for the FKLI. So you guys can see the underlying instruments is under Kuala Lumpur Composite Index, and the contract size is multiple by 50, which means every single 1 point moving is valued at 50 ringgit, but the market will be moving on 0.5. So 0.5 equals to 25 ringgit, which means 1 point equals to 50 ringgit. Next, we will talk about the contract months. Because in futures trading, right, actually we will have the contract month for every single contract. Like example, currently is on March. So the spot month that a lot of people that will be traded for FKLI will be on March. And then it will be next go to the April. And then next it will jump to the quarterly month, like March, June, September, and December. Okay, next will be the trading sessions. We have 3 day trading sections, which is on night time, which is the T+1 sections, which is from 9 p.m. until 11:30 p.m. And then the next day will be 8:45 p.m. until 12:45 p.m. And the third trading session will be 2:30 p.m. to 5:15 p.m. So actually you can see that we have 3 different times, which is categorized as 1 day tradings. Well, for futures contract, actually we also will have the expiration date. So the expiration date will be dropped on the last business day of the contract months. So I give you an example, like March. So if the last day of the March, which is 31, is dropped on Friday, so Friday will be the expiration date for the March contract of FKLI products. Okay, so in order for you to trade these FKLI products, the margin required is 4,200. Okay, so as you guys can see, this is the 30 component stock company that listed in the FKLI. So these are the company that you guys can see in the daily life, like CIMB, Genting Hong Leong Bank, or Mr. DIY, Nestle, Petronas, Public Bank, or Telecom, Autoglove, and the TN. Okay, so next, so why should we trade FKLI? First is the global assets. So FKLI is traded electronically on CME Complex, a global electronic trading platform. Accessing the SME Complex is easy and allow individual and professional traders anywhere around the world to access all the Bursa Malaysia derivative products. Second is the prudent capital management, which meaning that an insurance company or fund manager with an equity portfolio will sell the FKLI as a hedge to protect itself against a potential decline in the equity portfolio value. Next is to maximize the volatility tradings, which trader may use the FKLI to gain leverage exposure arising from the price volatility in the underlying FKLI index. Mostly this will be do right by the stock traders. Yeah, because in stocks, most of the stock Malaysia stock you're unable to short sales. But in FKLI, you can do short sellings. So for sure, in order for you to trade the FKLI, the cost of entry also will be lower if compared with stocks. So normally those institutional with a tight cash flow situation and they are unable to obtain the physical stock right now, they might buy the FKLI as a temporary substitute for holding stocks until it has available funds. So the FKLI position will be liquidated later once the stocks are acquired. This method entitled a cheaper entry with a similar exposures to the value of the underlying stocks minus the cost of outright purchase. So lastly, as I just now mentioned, so actually if you trade in the FKLI market, actually you have the ability to short sell. This is very good for those stock traders lah, for you guys to leverage your risk and your trading. So next, you guys can see this is the FKLI super sector breakdowns. So as you guys can see, among the three top super sector breakdown, there will be the bank sector, healthcare, and food and beverage. So is there any movement in this any three super sectors? It also will affect a lot in the FKLI price index. So next, I will introduce to you guys FM70. So FM70 is a Ringgit Malaysia dominated by mini FTSE Bursa Malaysia mid 70 index futures contract that traded on the Bursa Malaysia, which means what is the difference between KLCI and FM70? So KLCI is included all Malaysia 30 blue chip stocks, but for FM70, actually they are considered as a 70 constitution of FPM mid 70. So you guys can see there's a difference. So actually their concept is to do the leverage trading, we should only need to deposit a small percentage of the national value of the contracts, which we call it as the initial margins. So this leverage will allow you to have a greater exposure to the underlying index and the fraction of the total contract value. Besides of that, you also will have the arbitrage opportunity arising from the price difference between the FM70 and the underlying index. Yeah, so I can give you guys see about the contract specs. Actually, everything is quite similar, just the contract size is different. Like the FM70, the contract size is multiple by 4. So which means 5 index point equals to 20 ringgit. And then the trading hour actually is similar with the FKLI. All same, but you can see the initial margins is considered lower compared with the FKLI, as FKLI need 4,200, while FM70 you only need 2,500. Okay. So next, you guys can see this is the components in FM70. So as you guys can see, the most largest industry that included in this FM70 will be consumer industry. So as you guys, if you trade FM70, right, you guys don't need to pick those individual stocks. You guys can just trade it overall. So this is the company that included in the FM70, and I believe that this is quite a well-known country among our daily life. Yeah. So next, I will talk about what is the FKLI fundamental analysis, which is what factor will affect the FKLI tradings. So first, we will talk about the interest rate. So during the pandemic, the central bank has announced to cut the overnight policy rate to ease the pressure of downside risk to the economy due to the pandemics. So the Bank Negara left its key overnight policy rate unchanged at the record low of 1.5% on 3rd of December 2021. So as expected, the citing that the risk to the growth outlook remained tighter to the downside due to external and domestic factors. These include weaker than expected global growth, worsening supply chain disruptions, and the possibility of reimpositioning of containment measures due to the new COVID-19 variants of concerns. So the Monetary Policy Committee said that despite slowing down in the third quarter when the infection and hospitalization is peak, the economy activities were seen improving since July in the light with the reduction of social distancing measure. So on the price front, the central bank added that the headline inflation has averaged 2.3% this year and set the range between 2% to 3% until end of the year, which is 2010. So in the line of previous forecasts, and it is projected to remain moderate in 2022. Other than that, the banking stock on Bursa Malaysia also fell after the central bank mentioned that there will be the adjustment on the overnight policy rate given by the current economic challenges. So the interest rate actually still considered low. So actually this is quite not necessarily a good thing for economic growth and equity markets. So this could be seen on the US Federal Reserve low rate and the record-breaking performance on the Wall Street. So in other words, that money always seek for better yields. So the low interest rate also brought down the borrowing cost, which blessing for a corporate world and the consumer. So because of the low interest rate, right, a lot of people will be trying to borrow the money from the bank to start up their business. So this also could make the economy become continue growing. Yeah. So next will be the oil price. So during the economic expansions, the price might rise as a result of increased consumptions. So they might fall as a result of increase of productions but lower demands. So oil production Malaysia oil sectors is affected by a decline in the demand due to COVID-19 outbreak, as lockdown measure has put a vulnerability to a hot of April for the oil futures price to turn negative. This happens when it's on the first MCO. Yeah, so you guys can see the oil price futures become negative. So actually they directly stop trading for the day. Yeah. So this is because there's a fewer driver were on the road. So they also could decrease the public transportation service was running in many countries. So office also have to shut down after the worldwide lockdowns and stay-at-home orders. And the factory also decreased the productions. So this happened is the demand for the oil already fall. So for sure the supply also but the supply is keep continuing increasing. So when the supply is keep increasing, the storage space also need to be running out. So when these factors come out, right, so the oil price will return to the negative, providing that effective measure to reduce supply or increase storage space are not taken. Besides that, the price movement or two type of oil, which is the crude oil and the crude palm oil, has a significant impact on the local markets. As the Malaysian palm oil industry is significant contributor to Malaysia's overall economy, so providing the both employment and income from the export. So in 2011, the sector was become the fourth largest contributor to the Malaysian economy. So accounting there is 53 billions of Malaysia gross national income. Okay. Next is about the COVID-19 pandemics. So as you guys can see, the economic uncertainty and the COVID-19 outbreak pushed the FBN-KLCI below 1,300 point to the 10-year low on March 2020. So the KLCI actually closed lower after plugging in the afternoon trade with more equity, as the investor will evaluate the effectiveness of global central banks' monetary policy to mitigate the economic impact of the COVID-19 pandemics, and after China reported its latest industry output number, which fell below the market forecast. So next will be the political uncertainty. So actually the politicians are responsible for the policy decisions and forming regulation governing the nations, which directly and indirectly affected the company, local markets, import and or exports, purchasing power and economy as a whole. So but uncertainty, the traders are very hurt about the uncertainty, increasing the price drops. So when the Malaysian equity market was expected to stay volatile due to short-term policy uncertainty, following the unexpected change in the country political uncertainty and those external trade challenge. So as one of the main factors that keep investor was on the sidelines of the local stock market is uncertainty over the handover of power between the prime ministers. So speculation on the transition aside, most of the investors are prepared to wait for the dust to settle on the political funds and for there to be certainty on the policy before investing in the countries. Lastly, will be the trade war between the US and China. So predicting that if in futures US president will start a war, they will not start a war with like weapons like Russia and Ukraine, but they will attempting to derail another country economic goal. So when it already happens, right, you will see that the global economy will stop, which is no trade and no export, meaning that there is no earning growth. So for those high trader oriented economies such as Malaysia, right, will be affected a lot. That's why it will be affect also the KLCI index. Okay, so after we talk about FKLI, now I will reintroduce to you guys about the FCPO. So what is FCPO? So actually FCPO is a Ringgit Malaysia denominated crude palm oil futures contract which traded on the Bursa Malaysia derivative, which providing market participants with a global price benchmark for the crude palm oil markets since 1980 in the commodity futures exchange. So actually it's a legal agreement to buy or sell the crude palm oil at the predetermined price at the specific time in the futures. So why do we trade FCPO? Okay, so actually the FCPO trading markets are available with two types of category of market participants, which is we call it as the hedger and the speculators. So for those oil-related businessmen such as plantation company, exporters and milers, actually they will trade FCPO to manage the price risk. So to control their product cost and the profit margins, they will hedge into the FCPO to against unfavorable price movement in the physical markets. So for traders, actually they will act as a speculator in the market and gain the leveraged exposure to price movement of crude palm oil and earn the spread. So I will giving you a few scenario why people would like to trade in the FCPO market. So first, this is the plantation company do the hedging. So give you an example. A plantation company, they produce 20 million metric tons per month, which means they will have 240,000 of metric tons per year. So due to the global economic slowdown, the plantation company will anticipate demand for crude palm oil will be lower. So during that time, the Bursa Malaysia derivative FCPO contracts will allow those plantation company to hedge up to 3 years forward by selling the futures contracts. The plantation company decide to hedge 50% of the productions up to 6 months forwards into the Bursa Malaysia derivatives FCPO. So next is the arbitraging examples. Okay, so the concept of arbitraging is buying a commodities in one market and we will sell it in another market with a higher price. So you guys can see the example here. So if today I buy one FCPO contracts with the price of 5,000 ringgit in the Malaysia, I buy it at the lower price and then I sell it at a higher price. So after that, I can sell these contracts in the foreign country FCPO exchange, which the price of 5,040 ringgit. So you guys can see when I buy in 5,000, but I sell it at the 5,040 ringgit. So actually I can earn 40 ringgit, right? 40 ringgit per metric tons. But 1 metric tons equals to 25 ringgit. So you guys can see during I do this arbitraging activities, actually I'm earning 1,000 ringgit for this. Okay, so next is the benefit from the bearish markets. So I give you an example. Okay, today also the same thing. I bought one FCPO contracts at the Bursa Malaysia derivative exchange. So by today, I assume that the market will be go for I assume the market will be will be trade lower. So I will short the market, which is we call it as the short selling. So I buy it at the higher price and then I sell it at the lower. So when I buy it at the price of 5,000, but when market is drop 10 points, and then I close my position at 4,990 ringgit, which means I am earning another 10 points. Well, 1 point is equals to 25 ringgit, so actually my profit is 250 ringgit. So this is how to do the short selling in FCPO markets. How about if I go for the long position, which means that if I assume the market will be go for uptrend, and then I buy lower and I sell higher. So you guys can see, I buy it at the price of 5,000, but I close my positions at the price of 5010, which means I also earning 10 points. So 25 one index point equals to $25. So 10 points equals to 250 ringgit. So this is my profits. Okay, so actually you can trade it at the both side. So you don't need to be worried that if market drop, you are unable to do the short selling. So this is why the futures contract is quite attractive compare for a lot of traders for them to speculate within in futures market there. Okay, so next this is the FCPO contract specs. So the contract size is 25 per metric tons. So which means 1 point equals to 1 point per metric tons. So we make it simple. 1 point equals to 25 ringgit. But the contract months actually for FCPO, you can see actually you can trade up to 3 years. So for the trading month, right, it also same like FKLI. It will have spot month and then next to the following month. It will be offered for every single month. Like it's different with the FKLI because FKLI only offer in the like March, July, September, and the December. But FCPO every single month they also offer. But how to define the most volatile month, which we call as active month? Actually, for commodities product, right, it will be carried forward earlier 2 months, which is the active month. Like example, now is March, right? But the FCPO trading actively trading month will be dropped on June already. Yeah. So this is the slightly different things compared with the FKLI index. So next, the different thing is like the trading hours. For the FCPO, the night trading hour is same, which is 9 until 11:30 p.m. And the second trading session will be quite late, which is 10:30 a.m. until 12:30 p.m. And the third trading session will be 2:30 p.m. until 6 p.m. While the contract will be expired on every 15th of the month. So assume that if the 15th is dropped on Saturday, but Saturday is non-business day, right? So by the 14th of the month, which is Friday, you must close up your positions, or else we will directly help you to close the positions, and we will not help you to do any rollover for this. Yeah. So for your information, the initial margin of FCPO has been increased until 11,000 per contract due to the market is very, very volatile for these few months. Okay, so other than the FCPO, so actually the Bursa Malaysia also launching a new crude palm oil futures contracts, which is only specific to East Malaysia on Monday, which is 4th of December 2021. So this contract, we call it as a FKPO, which is will offer new pricing discovery of CPO originating from the state of Sabah and Sarawak, which contribute half of Malaysia's CPO and have long complained that they are more established the FCPO benchmark contract. This advantages them since the pricing is based on the infrastructure factors and the delivery point in Peninsula Malaysia. Okay, so you guys can see the pricing actually can be quite difficult if the cardio is only originated from Port Klang, which is in the Peninsula, or Landak Datu in East Malaysia state of the Sabah. So actually this FEPO contract are provided a rebalance, which allowing for a refined price discovery mechanisms and options for physical delivery, which is in Sabah and Sarawak. So FEPO is expected to trade at the premium of FCPO given the higher logistical cost than in Peninsula Malaysia. So according to Bursa Malaysia, the FEPO mirror almost all of the FCPO current specifications, with just some enhancements specified to the East Malaysia offer delivery through 3 ports, which is Sandakan, Landak Datu, and Bintulu. So Sandakan and Landak Datu actually accounted for 10.57% and 12.35% respectively of total export volume in 2020. This one you can check it at the MPOB data show. By the way, there is no data for Bintulu, while China make up the main export destination for vessel, paying from East Malaysia to the tune of 31%, followed by India is 13% in 2020. So the launch of FCPO also refined the complaint that East Malaysian palm oil is sold at a discounted price to FCPO, while incurring higher freight costs due to the larger distance, resulting in the Sarawak Oil Palm Plantation Owner Association estimating that these two states actually lose around RM1 billion annually due to the price difference. So this is the FCPO contract specs. Actually, all the thing is same, but the different thing is the initial margin. As you guys can see, the initial margin of FCPO is 5,000, which you guys can see is quite a huge difference between the FCPO lah. Okay. So now I will talk about the FCPO fundamental analysis. Okay, so first we will talk about the weather seasons. Actually, we have two types. So I will explain the first one first. So the first one will be the La Nina. Okay, so what is La Nina? Actually, La Nina is the weather patterns that occur in the Pacific Oceans. So in this pattern, the strong wind will blow the warm water at the ocean surface from South America to the Indonesia. So when the warm water moves to the west, the cold water from the deep will rise to the surface near to the coast of South America. In the winter of a La Nina years, these winds are much more stronger than the usual. This also will make the water in the Pacific Oceans near the equator a few degrees colder than it usually is. So even this small change in the ocean temperature can also affect the weather all around the world. So when the rain cloud normally form over the warm ocean waters, so La Nina will blow all this warm water to the Western Pacific. This means that the place like Indonesia and Australia can get more rain than usual. So however, the cold water in the Eastern Pacific will cause lesser rain clouds to form there. So places like the southwestern like United States can be more dry compared to the usuals. So this La Nina is caused by an interaction between the Pacific Oceans and the atmosphere above. However, it can be affected of weather all around the world. This change in the atmosphere can lead more lightning activities within the Gulf of Mexico, along of the Gulf Coast. Also, the environmental condition during the La Nina can lead to more tropical cyclones, which include hurricanes forming in the deep tropics. Okay. Next is you guys can see. So this is when the normal conditions, right? The warm water at the surface of the oceans will blow from the South America to Indonesia. But during the La Nina, this will make the water in the Pacific Oceans become more colder. Okay. So next, this is El Nino. Okay, after we're talking about La Nina, this is El Nino. So El Nino is the weather patterns that occur in the Pacific Oceans. So during this time, unusual wind cause the warm surface water from the equator to move east towards the Central and South America. El Nino can cause more rain than usual in South and Central America and in the United States. Okay. So normally, the strong wind along the equator push the warm surface water near the South America westward towards the Indonesia. So when this happens, the cooler waters will rise up towards the surface of the oceans near the South America. However, in the wind and the fall and winter of some years, these winds are much weaker than usual. So they actually blow the another way, which is through the South America instead of Indonesia in October. So the warm surface water along the equator piles up along the coast of South America and then move north towards the California and south towards the Chile. So many fish that live in the normally cooler waters of the coast of South America will be moved away or they will die. So fishermen will call this condition of warm coastal water and poor fishing as El Nino. So El Nino normally it will be happens during the Christmas time, yeah. So in the El Nino years, a lot of rains clouds form over this warm part of the oceans. So this cloud will move inland and dump much more rain than usual in the South and Central America and in the United States. Yeah. So that's all is the explanation for the El Nino and the El Nino. Next is the country export and import volume. So you guys can see this is the top 3 producer countries for the crude palm oil, which is the Indonesia, Malaysia, and Thailand. So you guys can see from the production part, actually the Indonesia have the highest volume within these 3. So next, this is the top 3 consumer industry country, which is we have India, European, and the China. So normally they actually consume around 50% of the world exports. Yeah, so you guys can see during the Chinese New Year or during the Indonesia's like they have for India they have like the Diwali seasons, right? You guys can see actually the demand from there is very high, which causes the price of FCPO also can together rise up to the quite keep breaking new high lah. Okay. So next will be the competitions for other eligible oils. So actually, the price of palm oil will be affected by other vegetable oils like sunflower oil, corn oil, and especially the soybean oil. So when the bad weather fall on the soybean plantations, it also will help to increase the palm oil price. The palm oil price. So US, Brazil, and Argentina are soybean producer countries. So once their oil supply is below the market needs, the palm oil will be the substitutions. So other than that, China is the world bigger oil import countries. So when those countries have a massive production on the vegetable oil, China tended to import oil which has a lower price. Other than that, the replacement of the palm oil will be the usage of liquid oil like rapeseed oil, sunflower oils, or soybean oils. So due to their liquid aggregate stage, they cannot replace all short of palm fractions in every application. Still in the application where only have the small volume of fats are used, for example like bread, release agents, or whilst the liquid fraction of palm oil are applied, so the replacement for palm oil actually is quite possible lah, okay. So next is about the festival seasons. Just like I got mentioned that the most top consumer countries will be China, India, and the Europeans. So you guys can see actually it's quite related. So during the festival seasons, it actually also can increase the demand for oil. So people will use it like praying purpose lah. Okay, so you guys can see during the festival seasons, actually if there is a short of labor on harvesting the palm oil fruit, also will affect the supply of the market too. Like previously during the COVID, right? A lot of palm oil plantations company they got mentioned that because they are unable to bring a lot of outsider to help them to do the harvesting the palm oil, right? Which causes we have the short of labor in harvesting this palm oil. So when the workforce has already extended their holidays and they are delaying the palm oil harvest, so the drop in the productions also will happens because no people go and harvest, right? Then all the fruit will be overripe. So this also can increasing the price of crude palm oil, because when the supply is lower, so then the demand is too high, so the price also will be keep increasing. Yeah. So next is about this is extra information for you guys. So you guys is very interested in FCPO, actually you guys can go for this website, which is the first one is the Malaysian Palm Oil Association. Okay, this is actually is a private sectors that for them to is a website for you guys to know more. Okay, and next the second one is the Malaysia Palm Oil Board, and third one is the Malaysia Palm Oil Council. It's very easy. MPOA, MPOB, and MPOC. Yeah. Okay, next I will move to the technical analysis. So firstly, I will talk about the support and resistance. So what is support and resistance? The concept of support resistance is the how to say okay, part of analyzing the chart patterns. These terms are used by the traders to refer to the price level on the chart that tends to act as a barrier, so preventing the price of an asset from getting pushed in the certain directions. Okay, so actually support is the price that, okay, guys can see okay. So actually support is the price level where the downtrend can be expected to pause due to the concentration of demand or buying interest. As the price of asset or securities drop, the demand of the share increase, is forming the support line. In the meanwhile, resistance zone arise due to selling interest when the price has increased. So you guys can look for the support and the resistance part. You guys normally, it's more easier for you guys to differentiate when you guys use the candle chart. When you guys use the candlesticks, right, you guys can see which line is touched among the most one, then there will be the resistance, and then it same goes to the support. Okay, actually this is very nice to use if when you want to doing some technical analysis, and it is quite very simple for you guys to, this is a quite basic one for you guys to learn. Okay, so next for you guys to do more easier in technical, you guys also can go for the exponential moving average. Okay, actually by my own, if I'm doing the EMA, right, I will set for 3, which is 20 days, 50 days, and 135 days. But this one will not go for the short term. You consider as the medium terms. Okay. Okay, so I give you guys see some examples. Okay, so you guys can see the red color one will be EMA 20 days, while the blue color one is EMA 50 days, while the black color one is EMA 125 days. So why we would like to using the EMA? So actually you want to determine the trend directions and then we want to trade in the directions. So when the EMA is rise, you may want to consider buying the price dip near or just below the EMA. So when the EMA fall, you may consider to sell it, which is the trend will be become the downtrend lah. Okay, so you guys can see for the example here. So when the EMA for 20 days is below the 50 days of EMA, actually the trend will be considered as a bearish, which is we call it as a downtrend. Well, if you come here, you guys can see when the EMA for 20 days is above the 50-day EMA, the trend will be bullish, which is an uptrend. And then when the EMA for 20 days is crossed below the 50 days EMA, well, the 50 days EMA is below the 125 EMA, these signals will be considered as the downtrend, or there will be a short trend change. Okay, so there will be a temporary downtrend lah. Okay, so that's all for the EMA. Okay, for if you guys want to learn more, maybe you guys can try to look into YouTube and Google because actually technical part is quite depending. There is no standard and equal a standardized way for you guys to follow. Yeah. Okay, next I will talk about the RSI, which is we call it as the relative strength index. So the RSI is developed by the J. Wallace Wilder. It's a momentum oscillator that measures the dip and the change of price movement. So actually the RSI will be oscillated between 0 and 100. So how to see? Okay, the RSI will be considered as overbought when above 70 and oversold when below 30. This traditional level can be adjusted if necessary to better fit the securities. So if examples if the securities is repeated reaching the overbought level of 70, actually you can adjust the level to 80. Yeah, actually it depends, but this is the standard way lah. Okay, you guys can see here. Okay, so for the this RSI line. So during some strong trends, the RSI may remain in overbought or oversold for those extended periods. So in the uptrend or bull markets, the RSI will tend to remain in 40 to 90 range with the 40 to 50 zones acting as a support. So during the downtrend, a bear market, the RSI tend to stay between 10 to 60 range with the 50 to 60 zones acting as the resistance. This range will vary depending on the RSI setting and the strength of the security and or market underlying trends. So actually the RSI also will often form a chart patterns that may not show on the underlying price charts. So actually when you open an RSI in the chart, right, actually you guys can see at the down there will also have a small charts. So you guys also can define the chart patterns, like there will be a double tops, bottoms, and trend lines. So you guys can see the chart patterns and define. Because sometimes if you see at the bigger chart, right, when you see the bigger chart, maybe you are unable to define what is the next trend. But when you see in the RSI, actually you guys can see there is another trend that show on the RSI. So this is the quite useful thing for you guys to know. Yeah. So you guys also can looking for the support and resistance on the RSI. Yeah. So that's all for the presentations and the explanation for the technical analysis. So if you guys have any question, you guys can just write it down in the question box, and then I will answer it later. Okay, so pass back to you, Hong Sing.
Hello. Okay. Yeah, okay. Because of some of the system problems, I'm unable to show my screen, unfortunately. But never mind. We are going directly to the Q&A session first. So from the question that I get from the audience, here is it. Shireen, can you try to answer this? The first question is that allowed to set the auto buy and auto sell in trading system for futures?
Okay, so actually, yes, you can using the order type to set the auto sell and auto buy system, because we have this system, so you guys can set it up manually. Yeah.
Okay, thank you. And so the next question will be, is that futures, because heard lots of people say the futures are unlimited losses for the futures contract. Is that the concerns from the investor? Is that true?
Yes, actually, if in futures contract, you will be over loss if you didn't set your stop loss. So in order for you to occur this overloss program, right, it's better you guys set the stop loss when you are entering the market. So like example, because the crude oil and the FCPO market is very, very volatile, and it causes a lot of people overloss because of that. So if you guys have interested to enter into the futures market, make sure your account have more funds to uh to flow, and then remember to do the stop loss. Yeah.
Okay. So it comes to the last question, I think, is that how can we get access to FM70?
Can you repeat again?
Where can we get access to FM70?
Okay, so actually currently our Phillip Futures, we also will offering the FM70. So if you have interested wanted to trade the FM70, right, you guys can open an account with us, and then by default you will get the Bursa Malaysia Derivative Exchange, which is included in FM70, FKLI, FCPO, FEPO, and the Singapore Exchange. This is by default when you are open the account with us. Yeah.
Okay, seems like there's still have a little bit of time, so I will deliver another question. One more is regarding the. Can you please explain support and resistance again from the audience?
Okay, sure. So let me move back to my slide. Okay. Okay, so I will explain again the resistance and the support. So actually this is the chart. So normally how we find the resistance first. Okay, you guys can see the green color that I circle one. So the green color that I circle one is the candlestick that touch on this point. So actually for the resistance, normally we will find a point. Normally it's better that when your chart is using in the candlestick, more easier for you to see. So you have to find the point which is touched a lot in the line. Then there will be the resistance. Next will be the support. So you guys can see I got circle out in the red color one. So the red color one, you see there will be a 4-point touched in this support line. So this will be the support for the chart. Yeah, actually the resistance and support is quite important because you can assume that, okay, so if market will be go for the uptrends, so what is the price that it will be touched, the possibility? Well, when the market is dropped, so where is my support level, support price level? But most of the investor, they were using the support and resistance plus EMA. Okay, but by today I'm unable to explain to you guys because this is quite complicated and it's for technical chart it's actually quite depending lah. But it's better for you guys if you guys are quite new in this market. My advice is better for you guys to learn the support and resistance first because it's quite easier and also quite simple for you guys to know what is the entry price and what is the target price and what is the stop loss price. Yeah. Pass back to you, Hong Sing.
Okay, thank you, Shereen. So thank you very much for you to this introduction of futures trading sessions. So before I would like to mention that no matter you are our clients or not, we offer free one-to-one coaching sessions, free seminars and webinars, and also free account openings for all of the events. So for free one-to-one coaching sessions, the key topics that we are focusing are introductions to futures, and also introductions to futures, and also products knowledge, platform coaching, and charting system. Hello, can you all hear me?
Yes, I can hear you.
Oh, okay. So I try to share my screen. Sorry,
Okay, so in the meanwhile for Hong Sing to share the screen, let me answer some questions. Okay, so I saw that this person asked, is there any expiration date for each contract? The answer is yes. Because for futures contract actually is traded by monthly, which means because our futures contract is traded
hello.
every single month. Hello, Hong Sing?
Yeah, can you hear me? I think I unable to share the screen due to the technical problem, so I will just continue the information through the voice.
It's okay. Let me explain some question to the audience first. Later
Okay.
you just okay.
Yeah.
Okay, just now, okay. So actually futures contract, like just now I mentioned for FKLI, right? Uh, it got offering like maybe currently is on March, and then it will go to the June, September, and October. So you guys can see when you guys open the chart, you guys can see there's offering 4 months for this. So when example you are entering into the March contracts, so by the right, the expiration date will be dropped on last day of the month. So during last day of the month, you guys must close this futures contract, because if you didn't close it right, actually we will directly help you to close it, so we will not help you to do the rollover. Yeah, but whether you are profit or losses, that is another things. Even though we will not help you to close, the booster also will directly close your contract, close up this contract for you. Okay, so this is the things that need to take note if you trade in the futures contract. It's different with stocks. Stock you can keep it for few months, few years, but futures cannot. Yeah. Okay, so I saw there's another person ask the minimum capital suggested. Actually, for us, if you want to open account, the minimum capital you need to deposit is around 1K. But it depends on which product that you wish to trade. So if beginners, normally we will advise the clients to trade in FKLI index first, because FKLI, the market volatility are not huge compared with the FCPO. Like example, 1 point of FKLI is equals to 50 ringgit. So I think the biggest fluctuation for the FKLI within the day maybe will be 20 points. So if you against the market, the most that you can lose maybe 1,000. But for FCPO, no. For FCPO, one index point is equals to 25 ringgit. But the market fluctuations per day, it will can move for 2,200 point to 500 point. So you imagine. So let's imagine if you go into the wrong way. So you enter to the market when the market is against you, and then it's against 200 to 300 points. So which means you may facing an overloss very easily for FCPO. Yeah. So I think there's, as the time is quite wanted to answer. So if there is another question, I think we will contact you personally, and then we will still explain to you lah. Okay, so that's all for the Q&A sessions. Pass back to you, Hong Sing.
Yeah, okay. Thank you, Shireen. Can you all hear me? Just to confirm.
Yes.
Okay, sure. So thank you very much for Shireen that helping us to answer so many questions from the audience. So before the ending, yeah, I would like to share some of the promotions from us, which is the Phillip Futures. The first one will be the Phillip Star products, which is start from now until 31 of December 2022. Our exclusive clients are able to enjoy a super low rates for trading micro crude oil, E-micro gold, and also A50. If you are interested to trade the following products, do not hesitate and register an account with us to enjoy it. And the second one will be the awesome rewards, which will be started on upcoming 1st of March. And this promotion are provided with free Food Panda vouchers for new clients, while also have valuable cashback for all Phillip Futures clients when doing trade with Phillip Futures. Yeah, you can kindly find out more details through our official website, or you can contact us after this webinar. So you can try to connect with us now on Facebook, LinkedIn, or YouTube by searching Phillip Futures Sdn Bhd, and Telegram by searching Phillip Futures. Yeah, do like to subscribe our page, because our page will have updates, events, promotions, announcements, and also market news. Our recorded video will also be uploaded on our YouTube channel. So if you have any inquiries, please do not hesitate to contact us through call, email, website, live chats, or Facebook Messenger. So last but not least, check out our latest promo and grab the opportunity to join it. With that, I will end the sessions for today. Thank you everyone for your time to join our webinars today. And also many thanks to Ms. Shireen on his insightful sharing. Good night everyone and stay safe. Bye-bye.